Hello, and thanks for checking out this video from NetPicks. And today we're going to talk about this really strange named chart pattern called the Quasimodo pattern. And despite that funny name, it's really just a change of trending price structure with a pullback to a defined area of support or resistance. Sounds pretty simple, right? And before we get started, hit like, hit subscribe to this channel. We'd appreciate that. And obviously any comments that you have or questions, you can pop them below after you watch the video. So let's talk about this. So when we have price advancing in an uptrend, price tends to make higher swing highs and higher swing lows. Buying just continues to drive price higher. But eventually what happens, price forms a trading range, or it can roll over into a downtrending structure of lower highs and lower lows. Believe it or not, understanding this simple concept can allow you to profit from trading. And you should check out this video, my top 2 patterns for bull markets, just so you can see how you can use this evolution of price to trade. Now, the Quasimodo pattern is going to use this evolution as the basis for the setup and a reversal trade. And while it does resemble the head and shoulders chart pattern, there is one glaring difference. So I want you to notice the second swing low that's marked as number 1. So the head and shoulders has that support level, and if we reverse it, it would be resistance in a downtrend. They're roughly equal, while the Quasimodo has that second lower low lower than the first. In fact, the further that second low breaks to the downside, the better. The area of interest is also different, where the neckline, that's the area between the 2 highs on the head and shoulder pattern, is where you want to see price break. With the Quasimodo, we actually want to see the opportunity up at the right shoulder. So how does it work? For the most part, we're looking at the same dynamics as the head and shoulders pattern until we get to that second low. So when the head and shoulders doesn't take out that first low, or it does by just a small margin, buyers are still content. Stops may not have been taken out. In fact, some traders may consider it just to be a double bottom, and that's bullish. With the Quasimodo, we're starting to see a lower low in place, and a trend change is almost confirmed. Stops may have been taken out, and when price reverses to put in that right shoulder, now buyers may be breathing a sigh of relief. They think the market's still going to go up. Some buyers may actually be underwater because someone had to buy that high. And when price starts coming back to the upside, then they may look to exit at the first sign of a price pause. But once price begins to fall again, those that are holding longs are going to sell out. We get some fresh sellers. We get further downside. So like all price patterns, you're not always going to find the perfect example of them, right? So also consider that if you're looking at a 60-minute chart that's made up of 12 5-minute candles, the pattern that you'll see on a 5-minute chart may look completely different if you pop up to the hourly. It might just disappear. A pattern on the hourly may look really choppy on the 5-minute. It all depends. So here you can see the left shoulder, the head, and then an extreme lower low. Price rallies back up into the zone around the first shoulder. This is Bitcoin against the US dollar. We get 2 cracks at selling at number 3. Now you can find these on a higher time frame as well. This is a daily stock chart. They're all over the place. How do you trade it? Well, we need to see the first part of the setup. That's the left shoulder. We need to see a low. We need to see the head, a lower low, and then we wait until we get the right shoulder. This is a 1-hour stock chart of Blink. And right now we're just waiting for the formation of the right shoulder. And once price gets to that black line, you would need an entry trigger. And that could be anything from a candlestick pattern to a resting order to sell. And if you are using a resting order to sell, you have to make sure your stop loss goes above the head, right? It's the highest red line. It's because that's the only price of resistance that you have right now. If using a candlestick pattern, then you would look to place it just above the pattern, right? That's the lower red line. Profit targets, it's usually the low before the right shoulder forms. This is an example on the buy side. Number 2 gives us our higher high and our profit target. Price returns to the same zone as number 1. That's where number 3 is labeled. Price rallies to the zone at 2, retraces for another bounce, and then just continues higher. It's a pretty simple pattern, but it's powerful, and it will show up on any time frame and in any market. The key is don't look for the perfect formation, but understand how it forms and what it means. You have to have a trade entry trigger as well. And you also have to know where you're going to place your stop loss. The profit target's pretty obvious, right? It's going to be the lowest low or the lowest high. It depends on which direction. You could use a trailing stop on part of the position. That may be a good plan for traders looking for bigger moves. If you like this video, hit like. Make sure you subscribe, and we really appreciate that. Any questions or comments, pop them below. Thanks for watching.